my question to you is, have you set a home buying budget? The truth is most home buyers don't. In this video, I'm going to explain to you why it's important and what you should be doing to budget for your home purchase. All right, Matt, the mortgage guy, licensed mortgage broker serving people in over 46 states. If you want to connect me and my team, go to greatmortgagebroker.com. In today's video, I want to talk to you about setting a budget when you're buying a home. Unfortunately, most people don't do this. What a lot of people do, and I know this because as a mortgage broker, I'm talking to hundreds of people every single month. I'm talking to first-time buyers, second-time home buyers, and really the whole gamut of different buyer types are all doing similar things in that they're letting the lender tell them, here's what you qualify for. When truth be told, you as the buyer should be setting the home buying budget. So what do I mean by that? You know what your expenses are. You know what you can comfortably pay as a mortgage payment. So do a little legwork on your side. Come into the process already knowing $2,700 a month is what we can comfortably pay per month for a mortgage. And then everything else falls around that. Generally, it's your largest expense. So if you've got student loans and car payments and you've got the SMUD bill and gas and food and all the other things, right? Those fall below your largest monthly expense, which is your home. You don't want to overextend yourself. And as much as lending guidelines do a good job, and they're stricter than they've been in a long time, so they'll protect you from getting in way over your head, they can, and I know this better than anybody, get you in over your head if you qualify for a mortgage payment that puts you right at the tippy top of what you qualify for based on your debt to income ratios, right? So before you do anything, track your monthly expenses. And if you don't have any sort of budget in your household already for all expenses total, that's a good place to start. And so you track what you spend every month and what you make every month. And then you can look at it and you can analyze it. And this doesn't have to be super complicated. This doesn't have to go into some, QuickBooks account. This can be a piece of paper. This can be an Excel spreadsheet on your computer. But I spent $914 this month on food. I spent $222 this month on gas. I have this bill, that bill, this bill, that bill. This one averages $200 a month. And so at the end of the month, I've got this much left over that is going to be a comfortable mortgage payment. Because what is going to happen is if you have too large of a housing payment, whether that's rent or whether that's mortgage, you're going to do one of two things. You're going to have to cut back significantly. And whether that's travel, doing other things you enjoy, or option number two is you're going to start racking up credit card debt, right? And if you make $6,200 a month and you spend $8,000, I'm no rocket scientist, but $1,800 per month going on a credit card over time is going to land you pretty deep, pretty quick. So set a monthly budget for all things and let that guide you what is a comfortable mortgage payment. What I think is another good practice for people to do is, let's say that you're paying $2,000 per month in rent and you're looking at places and you're setting your budget for $2,700 for a mortgage payment. In the 6 months leading up, in the 9 months leading up, in the year leading up, however long you want to do it, set aside that difference. $2,000 rent paid, $700. If you're planning on getting a $2,700 mortgage, set aside in a savings account. Let it build up. Having extra savings never hurt anybody, but know that it's not going to stretch you too much, right? That's like your practice run. And then, when all this stuff is in line, then you get yourself pre-approved. You go to the lender. I'm looking to buy a house in this range. I'm looking for a monthly mortgage payment at this range. Then a lender like myself can tell you, let me show you what that's going to look like based on today's rates, based on your 10% down payment, what it would look like. 10% down, 5.99% interest rate, and, $300,000 purchase. In that row, you've got principal, interest, taxes, mortgage insurance, homeowners insurance, all of it. All in $2,026 a month. If you buy something for $400,000, what's that going to look like? $2,700 a month. If you buy something for $500,000, $3,376. And when you have the information, you're able to, if you're honest with yourself, figure out what's the real number, right? As much as I'd like to buy this nice house that's $500,000, is $3,376 going to stretch me? Is it too much? Regardless of what the lender says. Yes, you qualify. Yes, we can get a loan done. Your debt to income ratio is going to be 49.96 and you've got very little debt. So we'd be able to qualify you for that. That's not the play. The play is comfortably, I can pay $2,700 a month. Not because I'm guessing or not because anybody else told me so, but because I've done the work. I've done the math. I take home this much per month. Spend this much in these areas. I want to set aside $500 for retirement. I want to set aside $500 a month for an annual travel budget, whatever the case may be. Know those numbers and get comfortable looking at them and figuring it out, making adjustments. That's what adults do. So hopefully this was helpful. Spend a little bit of time analyzing your own personal situation, figuring out what you qualify for, because as a mortgage broker, I want to be part of the dream. I don't want to be part of the nightmare. Nightmares come when people get in over their heads. They buy something a little bit too tippity top of their budget. And then something goes sideways. Somebody gets their hours cut. One of the two, has an unfortunate job loss or new expenses come up. Didn't realize, kids were going to want to go to that fancy of a college. Things happen, right? To where you want a little bit of buffer. You want a little bit of wiggle room in today's environment where, let's not sugarcoat it, right? Affordability is an issue. Mortgage payments are higher than they've ever been. You still can buy a house that fits comfortably within your budget. You just have to do the work up front. So hopefully this was helpful. Again, if you want to connect me and my team, go to greatmortgagebroker.com, fill out the form. We'll be in touch. If you want to connect with a real estate agent anywhere in the country, you can go to homeandmoney.com/Matt. If it's California, I've probably got a referral for you. If it's out of state, you want to make sure that you're working with an agent that's active and doing deals. And I promise you, homeandmoney.com will vet them. So homeandmoney.com/Matt. That's for an agent referral. Greatmortgagebroker.com. That's to connect and get pre-approved with my team and start figuring out not just what's part of your budget, but if you actually qualify. And if you do, for how much. But don't let that guide you. Take my advice. Hopefully this was helpful.